Ladies and gentlemen, welcome back to Driven Wyld. Today we are talking about the child tax credit. The child tax credit is a federal benefit that provides financial support for taxpayers with children, meaning that your cooter crawlies can help you save money on your tax bill if they meet certain necessary qualifications. So in this video, we are talking about everything you must know about the child tax credit, all of the nuance that comes with it, and everything in between. But before we do that, let's go over a quick disclaimer. The content of this video does not contain and is never intended to be legal, business, financial, tax, or health advice of any kind. This video is for entertainment purposes only. It is advised that you conduct your own research and consult qualified professionals before applying anything you find online. Also, thank you to GigTax for verifying this information and making this video possible. What is the child tax credit? The current child tax credit is a non-refundable tax credit available to taxpayers with dependents under the age of 17, meaning when they turn 18, they better be pulling their weight around your place, right? This year, the credit has been in and out of news, and lawmakers have hoped, but were ultimately unable to expand the credit in time for the 2024 filing season. But either way, tax credits can reduce your tax bill on a dollar-to-dollar basis, potentially eliminating your tax bill altogether. Some taxpayers may also be eligible for a partial refund on the credit through what is called an additional tax credit. Qualified taxpayers and their children must meet certain eligibility criteria and take into account the child's age as well as their relationship with the person that is claiming them. No, you cannot write off your nephew because they were hanging out at your place while their parents were on a vacation in Hawaii. Taxpayers must also meet certain income rules to take advantage of the benefit because credit phases out for high earners. Once your modified gross income exceeds the limit for your filing status, the credit amount you get may be smaller or you may be deemed ineligible. That being said, calculating your MAGI or modified adjusted gross income will be for a different video. How much is the child tax credit worth? Before I say this, I do want to be clear that this could change from year to year, so make sure you look up the value of your tax credits as well as make sure that you're getting the full value. But for now, let's go over the facts available as of this recording. For 2023, the child tax credit was worth $2,000 per qualifying dependent child if your modified gross income was $400,000 or below, married filing jointly, or $200,000 or below, all other filers. If your MAGI or modified adjusted gross income exceeds the above limits, your credit gets reduced by $50 for each $1,000 of your income that exceeds the threshold. Now, for most gig workers, they don't need to worry too much about that. And the refundable portion, known as the additional child tax credit, was worth up to $16,000. The refundable portion, known as the additional tax credit, was worth up to $1,600. For the tax year 2024, tax returns filed in 2025, the child tax credit will be worth $2,000 per qualifying child, with $1,700 potentially being refundable through the additional child tax credit, which is pretty solid in my opinion. Who qualifies for the child tax credit? Taxpayers could claim the child tax credit when they file their annual tax return. Generally, there are 7 tests you and your qualifying child need to pass. Of course, you gotta love the term qualifying child and not just any old fuck trophy. Your child must be under the age of 17, but at the end of the tax year. So once they are 18 and you hear a for not doing the dishes or taking out the trash when they were living there rent-free, just remember they went from sexually transmitted dependent to overgrown semen demon real quick. Relationship. The child you're claiming must be your son, daughter, stepchild, foster child, brother, sister, half-brother, half-sister, stepbrother, stepsister, or a descendant of any of those people. Either a grandchild, a niece, or a nephew. No, being a babysitter doesn't count unless you're doing the dirty deed behind their partner's back and they actually run away with you, which Good luck with that. So you can't write them off either. Dependent status. You must be able to properly claim the child as a dependent. The child also cannot file a joint tax return unless they file it to claim a refund of withheld income taxes or estimated taxes paid. Now, there are qualifications for this as well, but that'll be for a different video. Residency. The child you're claiming must have lived with you for at least half the year. And yes, there are some exceptions to this rule, but this is a general rule. Watching your nephew for a week is fine, but it isn't a tax write-off. It is a favor for your stupid brother-in-law. Financial support. You must have provided at least half the child support during the last tax year. In other words, if your qualifying child financially supported themselves for more than 6 months, they're likely considered not qualified. So if you decide to send your kid to get a job at 14 so they can learn about work ethic and get work experience at a young age, that's great. But if they are supporting themselves by paying some bills around the house or paying some of the rent, they are financially supporting themselves, not you.
But Joe, I saw a TikTok where a parent made their kid do that and they put it into a trust or a high-yield savings account. Isn't that the same thing?
Well, that might have been a great way to teach your kid financial responsibility and pay their rent and bills, earning an interest while making sure they're set financially. In the eyes of the IRS, you were saving money for them. And you were the one paying their bills, not them. Therefore, you were financially supporting them, while you're also teaching your kids good habits to financially support themselves. So, A for parenting, A for tax benefits, F for trying to find a way to make me look silly. Citizenship. Per the IRS, your child must be a U.S. citizen, U.S. national, or U.S. resident alien, and must hold a valid social security number. Income. Parents or caregivers claiming the credit also typically doesn't exceed a certain income requirements. Depending on how much your income exceeds the threshold, the credit gets incrementally reduced until it is eliminated. To be honest, I hate how ambition is punished in this way. Why should someone who earns more have less opportunity to utilize the benefits of the tax code? But it is what it is, I guess. That said, however, that's not an excuse to not make as much money if you have the opportunity to make more money. So if you have ambition, make it happen. How to claim the child tax credit. For the tax year 2023, you could claim the child tax credit and the additional child tax credit on the federal tax return or Form 1040 or 1040-SR. That was due April 15th or October 15th, 2024 with a tax extension. You'll also need to fill out Schedule 8812, credits for qualifying children or other dependents, which is submitted with your 1040. This schedule will help you figure out your child tax credit amount and how much of the partial refund you may still be able to claim if applicable. Most quality tax software guides you through claiming the child tax credit with a series of interview questions, simplifying the process and even auto-filing the forms on your behalf if your income falls below a certain threshold. You might also be able to get free tax software through IRS Free File. Additional child tax credit. If you qualify for the child tax credit but can't take full advantage of it because you don't owe taxes or you owe less than the credit amount, you may still be able to get a partial refund by claiming the additional child tax credit. And to claim that, all of the above income and dependent criteria must be met, but there are a few more rules. You must have earned income of at least $2,500 or have 3 or more qualifying dependents. Earned income typically means money from jobs or self-employment. It does not include some money from passive income sources such as dividends, pensions, welfare, or unemployment. You or your partner, if married filing jointly, cannot exclude the foreign earned income from your taxes by filing Form 2555 or Form 2555-EZ. So the Forex bros are SOL, the crypto bros, crypto is considered property and not currency, so you're fine until something changes in that department. The IRS figures your your additional child tax credit amount by multiplying your earned income above $2,500 by 15%. You can claim that number or however much of the CTC credit you were entitled to but couldn't fully use, whichever number is less. But keep in mind that the maximum refund for the 2023 tax year is capped at $1,600 per qualifying dependent. If you have 3 or more dependent children, the math becomes more complex. And because of the complexity of that, make sure you're talking to a tax professional and make sure you're doing things right and by the book, so that way you're not risking an audit. State child tax credits. In addition to the federal child tax credit, a few states, including California, Colorado, and New York, also offer their own state-level CTCs that you may be able to claim while filing your state return. Visit your state's Department of Taxation website for more details. What is the $500 credit for other dependents, ODC? If your child or relative you care for doesn't quite meet the criteria for the CTC, but you are able to claim them as a dependent, you may be eligible for a $500 non-refundable credit called the Credit for Other Dependents. The IRS has a tool to help you determine if your dependent qualifies. Child tax credit versus child and dependent care credit. Although similarly sounding, the child tax credit and the child and dependent care credit are not the same thing. The child tax credit is a tax incentive for people with children, while the child and dependent care credit is another tax credit for working parents or caretakers designed to help offset the expenses such as day camp or after school care. Both credits have different rules and qualifications, but the deeper details of that is a different video. When to expect your child tax credit refund. By law, the IRS could not release a refund for a return claiming the additional child tax credit until mid-February. Early filers who used direct deposit as their refund method, e-file, and submitted an error-free return should have seen refunds hit their accounts by February 27, 2024. The earliest, IRS says. If you file by paper, the wait times generally increase. The agency's Where's My Refund tool can also help you get a sense of what's going on with your funds. Consequences of a child tax credit error. An error on your tax form can delay your refund or the child tax credit portion of your refund. In some cases, the IRS can also deny the entire credit. If the IRS denies your CTC claim, you must pay back any CTC amount you've paid in error, plus interest. You might need to file Form 8862, information to claim certain credits after disallowance, before you could claim the CTC again. If the IRS determines that your claim for the credit is erroneous, you may be on the hook for a penalty up to 20% of the credit amount claimed. Of course, the best way to avoid such errors and to make sure you're getting the most out of your tax credits in general, while also getting your maximum value from the credits themselves, is to always consult a tax professional with your tax situation, which is where GigTax is here to help. Filing your taxes on time, promptly, and accurately is an inevitable aspect of being in business for yourself. For every hour spent navigating tax season alone, you miss out on potential earnings, precious moments with loved ones, and expose yourself to financial risks. Recognized as the leading tax preparation service for gig workers, GigTax is dedicated to simplifying the process, saving you time, energy, and money. Founded by Joseph Mayo, a gig worker with 6,500 deliveries across 7 platforms since 2020, GigTax addresses the overlooked, overcharged, and underserved needs of gig workers in the financial realm. Driven Wyld subscribers can take advantage of an exclusive 77% discount on GigTax's tax prep, bringing the price from $538 to $124. Act now to get this price locked in before GigTax's calendar is booked, because GigTax helps those like you make the wisest and most effective decisions on your business and personal tax needs all year round. Secure your spot today with GigTax using the description link below to their Instagram, slide into his DMs with the word Wyld, and get back to what you do best, making the most amount of money in the least amount of time in the safest possible way. Thank you so much for watching. I really appreciate it. As always, make sure to hit the like button, subscribe if you're new, and I'll see you guys next time. Peace.